Alrighty, I hope everybody is doing well. I made a post about this on Twitter. I think it was yesterday, if I remember correctly, about how I am validating my zones. And I actually figured out a little while ago, kind of a sequence you can actually run in terms of validating your zones and picking the highest probable zones beyond anything, right? And essentially what you do, right, is in the broad picture, I'm gonna say it this way, and then we're gonna go over some chart examples of the three sequences that I would recommend that you trade. And obviously it's up to you and up to how you want to go about it. But it is very, very and extremely powerful when you use it correctly. So essentially what you're gonna do is you're gonna find your execution chart, right? You're gonna find your execution chart, say if you wanna execute on the 10-second chart, right? You want a lot of setups throughout the day, and you want to be able to execute any hour of the day, any time of the day, get on for 15 minutes and get off, right? We're using the 10-second for this example. And like I said, I'm gonna go over three different sequences. But what you're gonna do is you're gonna find your execution time frame, so 10-second, and then you're gonna have a multiple of 6. With that 6, you're gonna get a higher time frame. So for example, 10-second times 6 equals what? 1 minute, right? So now with that higher time frame, what we're going to do is we're going to identify our higher time frame CSS, as most people know is a valid high or a valid low, right? And we're going to make sure that that area specifically lines up with our lower time frame zone. Now you may say, well, isn't that always the case? No. A lot of times zones will occur on your lower time frame chart without being validated on your higher time frame chart. And this is extremely, extremely important in picking the highest probable zones and the ones that you can really play a limit from, as you see me doing recently, without waiting for really much extra confirmation. Now, if that doesn't fit your your trading style, right, you want to wait for more confirmation, so be it, right? It still works just the same. You're going to still identify those high probable zones with that higher time frame confirmation beyond anything. So now we're going to get into some chart examples. The first one I'm going to go over is going to be the 1 minute and the 10-second. So I'll see you all on the charts. All right, so for this first example, I'm going to kind of just reference a couple things real quick firsthand, right? So with this validation, essentially what you are wanting to do is you are wanting to find and understand and kind of put it into emphasis that the zone needs to line up within near vicinity of your higher time frame CSS, right? So using that kind of theology, right? And we look at this chart, what do we see? On our 1 minute time frame, what can we deem this, right? Valid high over here, right? We have our CSS, right? We have our body closure below confirming this area. Now, if we look at this from this perspective, right? If we draw this over, what can we do? We can zoom out, right? We can zoom out a little bit, find the high probable swing right here, simply put this low to this high. Now, what can we do? Right? We can either take a limit at the 50%. I've been taking a limit at the 60%. Just makes more sense mathematically. And I believe GR said something about it in ARC's YouTube post. And I did the math on it and kind of understood the frequency drop percentage. And it's actually smarter to take the 1.5. Obviously, it's a little bit higher of a RR than a 1-to-1. But then again, this comes down to what you are comfortable with, how you want to execute this, right? Now, simply put, within this whole area, right, what's the cleanest area, right? It's going to be the area where the CSS resides in alignment with this lower time frame zone. You can see some of these down here, right? We don't get a clear confirmation on some of these swings, right? And we know we can play these with high conviction more than anything. It's more prominent on the higher time frame, and I personally would not recommend most people do the 1 minute and 10-second combo because you have to filter out quite a bit of things as you would normally. I mean, it's a 10-second chart, right? There's so many 10-second bars throughout the whole entire day to where you got to make a lot of decisions, right? Now, as we get into some higher time frame examples, like the 30-second, the 1 minute, right? As our execution chart, it's going to be a little bit clearer on that, and I think it's going to start to turn some gears in terms of identifying the high probable area. So this is the first example right here, right? We'll just briefly go back over, right? We have a really clean CSS up here. It showed willingness, right? We closed down within one candle, validating this area is a valid high, right? At that same moment, we can look on the 10-second chart. And what do we see perfectly in alignment with this swing, right? This CSS, this swing. You could even, if you really wanted to, tailor it down to this part. Look how accurate this is. You can't deny this, right? Look how minimal the drawdown is on most of these zones. They're going to be minuscule. If you're playing the 50% tap right there, right? 1.5 points. If you're playing the 60% tap right up here, 1 point. Immediately goes down to zone low. These will be the easiest and the highest probable quick trades you can take, in my opinion, right? So now we're going to get into some more examples of the 1 minute and 10 second. I'll see you all then. Okay, for this next example for the 1 minute and 10 second, we will do probably about 2 more because it's really a constant thing. It's not something that changes by the day, by the hour, by the minute. This is, in my opinion, like I said, one of the best validations you can have in terms of zones. Obviously, you need narrative. You need to be on the right side of the marketplace, just at the given structure more than anything, and focus on that primarily. But like I said, it's going to be one of the highest confirmations you can have. If we look at the 1 minute chart right over here, what do we see, right? We see a 1 minute valid low, came down, tapped off this imbalance. We could deem this as a layered CSS, right? If we come over and look at this, we first identify the area on the 1 minute, right? We find the valid area. There was a strong close above within 1 candle. That's not particular. It doesn't have to be 1 candle, but ideally I want to see them closing above in 2 to 3 candles. I want to see willingness in the area for price. Now, if we look at this on the 1 minute, right, we can define our area more than anything. Now, if we go down on the 10 second, right, if we delete this, what do we see perfectly aligned with this area? Now, if we look right here, we have a valid high, we have a valid low. What does price retrace to? Right down at this area. Where can you take your entry? You can either play the 50%, you can play the 60%. Look at this move. This move it gives. It's a 33-point move back up to this unmitigated area right up here, which coincidentally lines up with what? Our CSS. What can we do at that same exact time, right? We get anchor off of this low to this high up here. What is this? A high probable area. Why? What do we have in alignment with this? A 1 minute CSS. Right? We have our 1 minute CSS, our higher time frame validation, validating this area as a potential area that we can engage with price if it fits the proper narrative. And you can see how accurate these are and why I was saying you can, for the most part, and this is not financial advice, it's the way I trade these. I play these with limits. I don't wait for a flip to occur within. I am playing these purely off of limits. Like I said, I take the 60% and take it up to zone high. That gives me a 1.5, a really easy 1.5. What do we see price do on this move up? Where does it move to? The valid area on the 1 minute, which is also the valid area on the 10 second. What can we do? Depending on how your style is, if you're going for a 1-to-1, what can you do? 50% tap, precisely. What does it immediately go to? Zone low. Zone low. So this is all we're going to do for the 1 minute and 10 second. It's really all you need to know specifically about this. A couple little nuances, and this is constant across all sequences I'm going to talk about. You want to see, in an ideal world, you want to see displacement above the zone, right? You want to see displacement. Displacement is key. If there's no displacement, there's no willingness for price to move in your intended direction, right? I don't want to see a weak body closure above where we close up maybe like 5 points above the area of interest, right? With it being validated on the 1 minute and we immediately come back in. That's not something I'm willing to take. I'm wanting to take those trades that are going to move far beyond 1.5 because later down the road, you can stretch it down, right? You can stretch it to a far target. You can stretch it to a bigger target, ultimately giving you more profit down the road. So that's one nuance. The other one is I would personally say the highest probable zone, right? If we look at it from this perspective, is going to be a fail to close zone. And I'm going to go over that here in a moment. But there's some really, really clean examples today on the higher time frame sequences of just that, and we'll go over that. But really, displacement or a fail to close, or both for a little unicorn diamond setup, I guess you could say. Just a super high probable setup would be both of those incongruents. But ultimately, the main point here is you want that higher time frame validation to give you confidence in that area, right? You're not just blindly taking a zone, which is not wrong, right? If you find success and continuous P&L growth with that is by all means continue doing that. But for the people that kind of are struggling to identify what zones are better versus others, what swings are the higher probable swings than others, this is what I found to be, like I said, time after time, one of the highest probable confirmations in regards to zones. When the high time frame is validated and the low time frame is validated and they are in congruence with each other. That is one of the most beautiful signatures, in my opinion, that you can see when playing these. So now we're going to get into some 3 minute and 30 second examples and go from there. All right, so now we're going to start going over some 3-minute and 30-second examples and just kind of cover a little bit details. But first and foremost, I kind of want to show what I mean by validation, because you can see right here, if we look at this little swing on the 30-second, right, we have a valid high, we have a valid low, close above, right, decent displacement, couple imbalances created internally. However, if we go look at the 3-minute right over here, what do we not have? We do not have a valid low, right? We don't have our CSS confirmation to engage with this and ultimately look at the outcome of this right here, right? We come down, tap to 50%. Where do we immediately go? This low, right? Why? It's not validated on the higher time frame. We aren't in congruence with each other to actually engage with this properly with a high conviction, right? So this is the first one I want to go over, and now we're going to dive into some clean examples of the 3-minute and 30-second. All right, so here is the first example of the 3-minute and 30-second. And I know some people within the Discord actually caught this, and it was pretty beautiful because everything was kind of in alignment, right? We were kind of ranging a little bit. We got some decent displacement back to the upside to mitigate some areas, but at that same time, we left a beautiful 3-minute CSS, beautiful 3-minute valid low. And if we really, first what we're going to do is we're going to mark this out on our 3-minute chart, right? What do we see right here? What do we see perfectly aligned with this on the 30-second chart? Right? That 6x sequence is important because it's so properly aligned that most of these times the CSSs are going to be perfectly aligned with this. So like I said, let me go back to that. Let's redo this, right? If I go over here on the 3-minute, at that same time, the 3-minute area, the 3-minute validation we're talking about, what do we see perfectly aligned with this on the 30-second, right? Beautiful 30-second swing. We have a valid high, we have a valid low. We even had a internal sweep, right? On the 30-second, we had a fail to close, strong displacement above. We see a form of accumulation right here, right? We see displacement back down to our area of interest. What can we now do with this validation, right? We have our 3-minute validation, the CSS, and we have our 30-second zone confirmed, right? It's a clean zone, right? We see displacement, we see some accumulation above, we see some displacement back too. You can either take your entry out to 50% for the quick one-on-one, or you can take a more refined entry at the 60% like I do, right? And you can see how this is respected. And out of most of these setups, right, how minimal this drawdown is and why, like I've said multiple times, why I'm comfortable playing limits here rather than waiting for confirmation, right? Because we have the higher time frame sequence in alignment with what the lower time frame is dictating. And I know Dave has said something specifically. I can't remember off the top of my head about something about low time frame structure facilitating higher time frame structure. And I really think this beautifully showcases it and how they move in congruence with each other and allow them to validate each other. And it just gives the picture perfect area and the high probable area to engage with price, right? So this is the first 3-minute and 30-second example that we're going to go over. Now we're going to go over another one and kind of move on to the next sequence. All right, I want to jump in and kind of go over this one too really quick because this is another example of invalidation, essentially, from what our higher time frame is telling us. Similar to that first one, that first invalidated one, that was an L. This is the exact same sequence, right? We don't see a CSS. We don't see a valid high, right? The way these candles are printing, the only way this would have been valid was if we put in a wick right up here, tapping into this imbalance, then this area would have been validated, right? But since we did not do so, right, we didn't put in a prominent swing point, and that's something specifically I use for CSSs, is it has to be in alignment with a swing low or a swing high as normal, right? But what do we see here, right? We see that area that could have potentially formed something, right? If we weren't looking at the higher time frame and only looking at the lower time frame, what do we see? We see a valid low, we see a valid high, decent displacement away from the zone, but ultimately, what do we see happen, right? Without the validation of the higher time frame, what does this become? Invalid for us, meaning we're not going to take it, and look what it saves, an L, right? We see this get ran. It comes up to reprice these imbalances over here, up here, but ultimately, we would not be engaging with this because it's not validated on both, right? We don't want to engage with any kind of swings or anything that are not validated on our higher time frame as they are validated on the lower time frame. So now we're going to move into the last example for the 3-minute and 30-second. All right, so for our last 3-minute, 30-second example, this is what we're going to go over. This is actually a really beautiful one and showcases it picture perfectly, right? So on the 3-minute, what are we repricing off of? This area, this balanced price range, aka also this swing over here. We come up, we get a shallow mitigation, which is usually expected with kind of balanced areas in regards to what price is doing, right? So we can anticipate that and look for that potential thing to happen. But besides the point, what do we see on our 3-minute for our validation, right? Similar to every single setup that we have talked about so far in this video, what do we see, right? We see our validated CSS on the 3-minute, right? We see our validated high. We have a strong body closure below, strong displacement. From there, what can we do after we have identified that and confirmed that on our higher time frame chart? We can now go down to our lower time frame chart and look for the valid area, right? On the lower time frame chart, at this 30-second chart, where would our valid area be, right? It would be from this low up to this high. The body close below that confirms such. What do we see happen? Price accumulates, key, right below this, returns back up into this area, filling this little imbalance up near the 60%. And what do we see happen? What do we see price do? Price taps the 60%, delivers the 1-to-1 or the 1.5. What does price also do? If you're taking off the 50%, taps the 50% and gives you the 1-to-1. Super, super clean. And you'll notice a reoccurring instance with most of these setups is how long they spend within that said swing, that said zone is going to be minuscule. Most of the time, you're going to get that V shape where it's going to go up, it's going to tag you, and immediately go to TP. I'm sure you have seen that purely off some of the charts that I have shared this week on Twitter, right? So now we're going to move into the last sequence I want to talk about, and anything beyond that is kind of up to you and what you want to do. Like I said, the correct multiple for this would be 6. But the last sequence we are going to talk about is the 6 minutes validating 1 minute points of interest. So now we're going to get into that for our final sequence that we can talk about before wrapping this video up. All right, so this is going to be our first example for the 6 minute and the 1 minute, specifically because this is a fail to close one, and it's one of my personal favorites to trade. But specifically, right, if we look at this from the 6 minute, what do we see? First and foremost, right, this is not always needed, right? More importantly, kind of just being on side and trading the correct move based off displacement and what you're currently seeing in the marketplace. Are we bouncing off certain POIs, higher time frame narrative? Where are we in price, right? A lot can go into this, but ultimately the function remains the same, right? We see that 1 minute fail to close on, or the 6 minute fail to close down here. And usually, in most cases, for the higher probable fail to close, I would more so put more weight, obviously, on your higher time frame. So if you're on the 1 minute and the 10 second, I would be ideally wanting to see a 1 minute fail to close. But if a 10 second fail to close is present, without a 1 minute being, that's perfectly fine. If the area is valid in terms of what price is doing, then obviously you'd still want to engage. But ultimately, right, back to this. What do we see on the 6 minute validated, right? We see the 6 minute CSS validated, right? The valid low, we close above, strong displacement on that candle. What do we see? Firstly, right, we see the CSS lined up, right? We get a body close, strong displacement, nice imbalances created within. Where's the full break, right? This high. Break above this high, this would be the true zone. What do we see price do? Price comes down. What does it do? Tap the 50%. What does it immediately deliver? Just like all the setups we've talked about. A V-shaped recovery, 1-to-1. These are super consistent in what they do, and they are just, in general, high probable areas. And we'll actually do a continuation because this is actually really, really beautiful over here. And I wish this one, I mean, this is kind of a lethargic one that I don't think is really, really clean to talk about, but it's still present, right? What we see up here on our 6 minute chart, right? We see a 6 minute CSS. We get this body close. Not the greatest body closure, right? Even down here, technically, the way I deem body closure, this technically wouldn't have been valid. But you can still see how powerful this is purely based off of what the higher time frame is dictating and what is forming on our higher time frame in alignment with what the lower time frame is telling us, right? Now, if we zoom out just a little bit, right? What do we see right over here? This very obvious, similar to one of the first examples we just talked about, balanced price range. Right over here, what do we see? 6 minute valid CSS, right? Now, from down to there, what do we identify? Where's the break? Where's the low that's broken? Right here. What do we see price do first here? We get a shallow mitigation, meaning this area is still unmitigated, right? Most of these, just depending on displacement and how you want to play them, right? You can look at this from a viewpoint and be like, okay, I still want to engage with this because A, it's unmitigated. We're seeing a bunch of accumulation. This is all accumulation, right? Right down here, see a move up. What does this instantly deliver on that 50%, right? In the high probable area, removing guesswork out of anything else. Instant V-shape, tags you in, instant TP. That was 65 points if you're going purely off of that. So I think now, I mean, it's really up to you to kind of, I would say, go back test this because it's definitely a really, really high probable thing to add in for confirmation if that's what you're wanting. I'm not saying this is needed for everybody, but it's definitely something very, very good to add in terms of confirmation. And ultimately, it's going to come to you back testing it and seeing if it works well for you. I think for the majority of the people that this would work quite well because, like I said, it's giving it extra sense of validation, right? You have your higher time frame, you have your lower time frame. So I think this is about it for this video that I wanted to cover. I will be making some more videos about this probably very, very often because, like I said, this is kind of like a light bulb with these swings here a little bit back, but it makes so much sense and holds so much validity that you're going to look at this on your charts and be like, just wow. Like it makes so much logical sense that it was just kind of right there that whole time, right? And I hope this is beneficial for most people because I know a lot of people love to trade zones and swings. So if you find kind of any positive outcome from this, don't feel free to, or don't hesitate to always reach out for questions in terms of kind of little nuances. Like I've said, I covered a few, right? We have the fail to close that I like to see. We have the displacement that I like to see. But beyond that, it really just comes down to you and how it fits you beyond anything. So with that being said, I'm going to go ahead and finish up the video here. And like I said, more videos to come specifically about this specific sequence. Like I said, just a little recap, right? We have the 1 minute and the 10 second, right? X6 multiple. We have the 3 minute and the 30 second. And then we have the 6 and the 1. Those are the only three that I personally would trade. It works. You'll see it work beautifully on the 12 to 72, the 72 to the, I forgot the multiple, but it still works wonderfully. And you can almost somewhat form narrative and bias if you're doing the 72 minute and 12 minute sequence. So like I said, that is going to be up to you to backtest personally and if it fits you properly. So with that being said, I'm going to go ahead and wrap up the video and get this out as quick as possible because I feel like it's beneficial for a lot of people. So I will catch you on the next one. I appreciate y'all. Have a blessed day. Later.